And people, I think they're going to be surprised to the upside once we close above 29 on the daily chart and then on the weekly chart. And if we get a monthly close above a February close, if we could close above 28, 29, man, that's going to unleash the floodgates.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is Patrick Karim from badcharts.com. Patrick, thank you so much for joining us today.
Thank you very much for having me, Elijah. I appreciate it.
Definitely. And I'd like to first ask about the silver market, because you've been reporting on this and you really see that really soon the silver market could really take off. What is your perspective, and why are you so bullish on silver right now?
Silver, it exploded back in July of 2020 from a huge base, just like gold did 1 year previously. And just the pattern, the technical analysis pattern, that long forming base, it's all that pressure. So whatever people say, oh, there's manipulation, price suppression, for me, I just consider that as fuel, whether it be like I'm a chart trader, so I try to abstract myself from the fundamentals and all these news stories. But the logic is in the chart. So the more people, let's say, they suppress price, or the weak hands, they over long period, they get out of the trade. That actually creates like the water balloon, try to keep on the water. And as soon as there's no more pressure on top, no more selling pressure or no more sellers, everybody's like, and it just exploded. So it did that about in August of last year. July, it exploded up. And right now, it's consolidating just perfectly, just below those 2013 lows. So there's a big top formation about 10 years ago from 2011, 2013. And the highs were like 40, 50. But when it broke down, that support now became resistance. And it's right where we are right now, 29, 30. And we've been consolidating very, very close to that. And in technical analysis, it's when you have a big basing pattern, the velocity that you went in is usually the velocity that you go out, because when you go down the big pattern, there's not much sellers, the price just crumbles. So on the way up, there's not many people who bought at those prices that, I have to like break even at that price. So right now we just vacuumed up and we're consolidating right close to that breakout line. And gold has shown the way. Honestly, if I wouldn't have seen gold break out above its all-time highs a little while back, silver, I'd be doubtful that it could do the same move and break out above its all-time highs. But silver has always tracked in gold. If gold went to all-time highs, silver went to all-time highs. So it's just a question of time. And I see it like when the trolls come on my Twitter feed and my tweets don't get much traction. I kind of sense that people are not looking at the correct asset. They're all in the fear of missing out, let's say on Bitcoin. Oh, Bitcoin's at 50,000. Now they're talking 100,000. So a lot of the attention's there. We hear about Buffett dumping his gold and all this type of news I love. When everybody is looking at silver, I kind of get queasy, even if the chart's bullish. But in the past few days, or even the last week, it's like we've been forgotten, and silver has been creeping up higher and higher. We're not at 17, we're not at 20, we're not at 25, we're like at 27, 27.50. So for me, this is probably your last chance, to buy right. And this is pretty much where it's happening right now.
And with respect to that, you kind of mentioned the resistance at about 29.30. So you're saying if it gets above that, we could skyrocket pretty soon to the all-time high. Is that what you're saying?
Yeah, and pretty much more faster than, I always try to do charts. People go on my Twitter, different ways to see where's the resistance, because there's resistance that could be defined, let's say, on the yearly chart that you can't see on the daily chart, because everybody looks at those all-time highs, 40, 50 in the 1980s, but silver didn't stay there a long time. So there's not much resistance right there. The true resistance is where silver stayed for a long time. And if I go on the yearly chart, you see that the silver stayed a long time around that 29 area, even back in the 80s. That's where it peaked, and it stayed along it. And 2011, same thing. And right now, same thing. So I think we could go really higher and faster than people imagine, because that $40 or $50 for me, there's not much selling pressure there other than psychological. People, I have to take profits. I'm at all-time high, can't go higher. There's actually not that much resistance from people that bought at those levels that are still there. Most of the bulk were grinding it Right now, we grind it through the last few months around like that, just below 29. And people, I think they're going to be surprised to the upside once we close above 29 on the daily chart and then on the weekly chart. And if we get a monthly close above a February close, if we could close above 28, 29, man, that's going to unleash the floodgates.
And how high do you see silver going if it does rise above its all-time high of 50?
Well, right now I have for my targets for this year is for silver for Q2. I'm pretty sure we're going to be in this above 45, overshoot on the smaller time frames, maybe 60. It's going to spike up high, and then it's going to consolidate maybe during Q3, while gold is going to take the lead, and gold's going to do its thing and finish its consolidation wherever it is right now, 1750, 1800. Gold's going to make a nice move up to the 22, 2300s. And then silver is going to close the year higher after spiking up above those 45, 50, then going back down to test that breakout around 30. I think silver is going to go really high, like maybe 70, 80. I'd have to look at my charts where I had it, but I think silver is going to close very high by the end of the year. And my targets 2022, 2023, easily silver, and I have triple digits targets coming up more and more, different ways I do the charts. But silver in triple digits by 2023 there is very reasonable the more I look at it. Look, if ever the price action starts to deteriorate, we start closing below 1 year moving average, we're going to have to reconsider. But right now, since we're above an inclining 1 year moving average, that's telling me that we have to look up and not down, And any fear scenarios you have, they're not going to print money, the economy's overheating, they're going to have to raise rates, whatever that is, for me, you got to put that on back burner and just look at the actual price action on the charts.
Now, if we look back to where we were around August, we saw, a spike up to around the $29, $30 level. And then we saw, a consolidation ever since then. So what makes you say, this recent move we saw February 1st, I think, up to about $30, and now we're seeing a bit of consolidation. What makes you say that now is the time that we're going to see that spike through $30? Because that's not what we saw if we go all the way back to August when we saw that spike up. We didn't retest that until many months later.
Well, it comes back to the basing formation. So silver did an arc, and the angle of entry is often the angle of exit. And right now it did what I call a flag pull. So from those March lows all the way to 29, and then it consolidated back to 22, the lows, and then come back to 29. It's been carving out actually like a flag or a pennant, whatever you want to call it. And once that resolves, and it's about in that same time frame that it's done its previous corrections, maybe if it's not this month or next month, once it closes above the energy that it's been accumulating since that explosion of those lows that it's been trying to get up. Once all those weak hands or those traders are out, that close above 29 should give that measured move added from that pole on top of, from the bottom of the flag all the way on top. And that's like one of the other techniques there that I use there to get those 45, 46 targets. And it's the angle. It's always about the angle. So the angle from those March lows to where we got those August highs, that angle tells you kind of the momentum, the push, and if you take that angle and you put it to wherever we break out, that's going to give us those targets there for Q2 for silver really going up higher.
Where do you see gold going as silver moves to all-time highs?
Well, yeah, gold recently has kind of been super fearful, super scary, because even on the charts right now, it's really borderline, giving signs that it really wants to go down. But usually that's when I call those fear entries. And if silver shows that it's going to keep going up higher and gold keeps going up higher, for 2023, I had some targets for gold, around the 6,000. It's some insane numbers. If silver goes up to what I think it's going to go up in those 125 or something like that for 2023, gold should be around 6,000, 6,100. Which also gives us a nice gold to silver ratio, about 33-1. And gold silver ratio has been giving a nice range, let's say from in a bull zone, when it's below 80, and above 40, it's like a nice trending zone where the gold silver ratio has proven that it likes to be since like the past the 10, 20, 30 years. And that's going to give us a nice sweet spot for gold and silver to peak. So like big numbers, they look impressive, like Bitcoin, 50,000, or gold, 6,000, but that's in 2023, that's 2 years down, 3 years down. That's only like 3 times higher than it is today, or 4 times. It's not that inconceivable, that we get those type of returns on gold.
You mentioned Bitcoin, and yeah, I mean, if you look at Bitcoin, we've never really seen an asset skyrocket that much or increase that much. I think it's pretty much completely unprecedented. What is your take on where we are currently around the 50,000 mark?
Well, silver, for Bitcoin, I had this crazy target. If it did an analogous move to like what silver did back in the 70s, I have like a 2.9 million target for Bitcoin. But that's like, it's never going to be like in a straight line, right? And I use one of my favorite technical indicators to gauge fear, So before anybody goes in a trade, they should always look the distance of an asset to its 1 year moving average, and look previously where it peaked versus that. So let's say Bitcoin in 2011 or whenever it peaked previously, 2017, it was 220% above its 1 year moving average. And after that, it just it severely corrected and hibernated for a couple of years. Right now, Bitcoin, the last time I checked, was over 200% above its 1 year moving average. It's insane. So it's fear of missing out, and you see it everywhere. Everybody has a YouTube channel with Bitcoin captchas, and you got to go. It's going to the moon. Elon Musk, it's like Elon Musk buying Bitcoin. For me, it's the same thing as Warren Buffett buying gold. It practically marked to the week close to the top in gold when Warren Buffett he said he bought gold. And right now, the fear of missing out for Bitcoin is insane. And when you look at the chart, you're super far away from the 1 year moving average, which right now it's close to 19,000. So for me, that's my drawdown. So wherever Bitcoin is right now, the risk is it's going to revert to mean and maybe undershoot. So if you're buying at 50, 60,000, 20,000 for me, you have to calculate that it could go reach its 20,000 mark, since it's a 1 year moving average. Although if it's still increasing, that's the risk. And the reward, the reward right now, you're close to all-time highest distance away from the 1 year moving average. So it's really, really dangerous. I have a feeling a lot of people are going to get trapped right now between 50, 60,000. And the best time would maybe to get into Bitcoin is just wait for it to close down. Let the 1 year moving average catch up. Bitcoin could be at a higher price or lower, but at least you want to be compressed close to the 1 year moving average. And that's like coming back to silver and gold. The gold is like right on its 1 year moving average, coiled. So it's a low risk entry, high reward. Silver is, I think, above 20% above its 1 year moving average. And it usually peaks like at over 170% above its 1 year moving average. So silver has a lot of fuel, low risk. Bitcoin for me is higher risk right now, just because it's so stretched away from its 1 year moving average.
This is kind of a maybe tough question to answer, but what is your worst case scenario for precious metals right now?
Well, the worst case is we go back into hibernation mode. So we go back, whatever we're seeing now as a price action, until like silver has a monthly close above 28, it's still at risk of having worst case like a 2011 top where it can't do a new high, and then it just crumbles and it closes below its 1 year moving average, and then just we have to wait for it to hit a low and then restart a basing pattern, because all these people that bought now, they're trapped. So they're going to create overhead resistance. And you need time to heal through that, unless insane buying pressure recomes to buy those weak hands. So for me, a close, if silver closes below its 1 year moving average, wherever it is now, you have to say, okay, something's like fundamentally a macro driver is not as strong as we thought it was, and we have to take a breather. Gold right now is right on its 1 year moving average. So really gold, I want to say close above 1800. The February is super critical for me. And just like gold's the gateway for the whole precious metal sector. Just like gold broke out ahead, like a lot of people say copper's leading. No, gold led like in 2019 when it broke out, and it's going to lead on the way down. So we got to keep an eye on gold. As long as it doesn't break out, it doesn't have to go crazy gold, but as long as it doesn't break down, the floodgates for the commodity bulls market is open. So yeah, that's kind of the worst case scenario is gold just loses momentum and goes in a hibernation mode there for who knows how long there.
So what I'm hearing kind of is either hibernation or a huge spike up, right? You don't see a lot of downside for the precious metals.
I really look, we had an insane, if I had a chance to go lower, it would have done it during 2015, 16. The rock bottom for me, gold, if you look at a long-term charts like I love to do, it's always higher lows, even if it takes years to carve them out. In the 2000s, gold did it slow, I don't know, 200, and it really refused to go lower than that. Then from 2011 to 2021, the lows was at 2015, around $1,000. Those are powerful lows. So if you want a really worst case scenario, it would have to be above 1,000 for gold, I don't see it in carving out a lower low below 1,000. And silver, same thing. I don't see it carving a lower low below, I don't know, $10 or $11, man. That's like uber worst case scenario. You go down to those levels.
And kind of getting to how precious metals really have been, it's been a really good year and a half or so. Did you want to talk about how really silver has been outperforming the NASDAQ recently?
It's always a lot of eyes, everybody like mutual funds, all that. Everybody's buying the NASDAQ, Tesla and all that. If you sink at those March lows for silver, so when everything had a full reset, everything crashed, the March lows for silver all the way to today, even if silver consolidated since hitting those August highs, it's been outperforming the NASDAQ, so the most performing of the U.S. equities market, by 19 or 20%. And even if I give a benefit of the doubt for the NASDAQ and I'd sink at the NASDAQ lows for the March, and since then, silver has still been outperforming the NASDAQ by 10%. So for me, that's like, there's a shift in capital flows. So silver's not getting sold since those March lows. Whatever monetary imbalances that the Fed had to do, whatever had to do to drive to keep nominally those NASDAQ prices high, even if they look super good, it's going to be reflected in whatever drives silver. So whether it be inflation or its monetary aspect, it's driving silver at the same time, and it's driving even more because, like I said, we have that 10 to 20% gain overperformance by silver versus the NASDAQ since those 2020 March lows. So until that changes, you want to be in the best performing assets. Well, right now, silver has proven since March lows, even right now it's been consolidating and moving sideways while NASDAQ has been going up. It's still outperforming NASDAQ. So for me, that's where you should put your focus on the strong performing assets.
All right. Well, Patrick, Karim, we really appreciate your time today. Before we let you go, where can people find you online? And would you like to share any last thoughts with our viewers?
I'm on batcharts.com, but go on my Twitter. Everything I do, all my rabbit holes, all my crazy charts, they're on Twitter at batcharts1. And I'm contributing to the Steve Penny's Silver Traders report, so they could click on my affiliate link and they could see my exclusive charts every week. I give 2 exclusive charts that you can only see on his free newsletter. That's batcharts.com/SC. And I really appreciate your time. I'm discovering the whole precious metals market. Like, I'm a chart trader, but I'm also a gold and silver aficionado. I really love gold and silver. I love those metals. I have silver coins at home, and when I hold them, like, it's really something, And I'm really attracted to that. I'm really supportive of the whole precious metal sector, and I hope that when it's time to sell, I won't be too emotionally attached, and I'll be able to lock in those profits and tell everybody, look, guys, we've had a good run. It's time to go. But until then, I think we're good till the end of the decade for sure. No problem.
All right. Once again, Patrick, thank you so much, and God bless.
Thank you, sir. Take care.